12/21 of 2012. Good morning, everyone, and Merry Christmas to everyone. And the world is still here today. It didn't end. However, we're going to talk about the futures this morning. In the NASDAQ 100, price line is down $12.59. Apple's down $10. Google's not as bad yet, only down $6. This is the gap open down list. The NASDAQ futures are down huge right now at about 42 handles. The Dow futures were down last night, 262 handles or so. Right now they're down 200. The S&P futures are gapping down to 1417, down 22 handles. And why is all this going on? Because we told you people. We gave you a warning. StockMarketFunding.com, we always do. If you listened to it, you did well. If you didn't listen to it, you're buried. And what am I talking about? United States government hasn't done their duties to serve its citizens. The gap open down is going to be huge today because they're going to have a recess, and stocks had their little Thanksgiving rally, like we said, and they had their little Christmas rallies already come and gone. What's potentially going to happen is that the amount of selling, we don't know exactly how much selling is going to be between people in high-frequency computing machines that have buy and sell scripts in the broader exchange. What we do know is that this bull right here is down the TQQQ. This thing is taking a big haircut here. And as I showed in all of the key indexes, and this is a gap open down. Now let's get here. Let's get right over here to, there's going to be a lot of indices today. People are going to be selling. They should have been selling like we told them to do all along. For this kind of reason. Because people they see the market going up every day, and they're supposed to be going up every day in this time frame of year. However, the United States government causes this right here. This is who causes this here. And those are your politicians here. Ones you voted for maybe are involved. You should think about it, as far as I'm concerned. The gap open down is on the NYSE. We got MasterCard, which we trade every day. We got Goldman coming down. Mr. Rick, you'll be watching that Goldman on the pullbacks. VMware is in here. Got Signup. You got Cummins in here. Look at how long the list is on the NYSE. Look at how long this gap open down list is. Anything that's 1.00 ratio, which equals $1, qualifies. And look at how far it goes. It goes right here to APD. All of these from right, and then it just keeps going. It's a slew of red. And it's for you people to understand about volatility. Because if you don't understand about volatility, then you can come here and learn it. How do I trade and make money on the opening bell is the key. Every stock will hit a lower support level and they'll bounce within this gap open down. And it's called the left elbow gap down. That's where you have the close, and then some of them are way down there, but then they trade right up off of that bottom there, and you make a gain. And then they roll over and get weaker, and you go short again, and you make another gain. How do I trade a huge calendar year of 2012 on the NYSE? Look at, a lot of these are on our shopping list. EOG, CRM. So when people are done selling for the remainder of this year, as we start 2013, please be very coherent. And please listen to what we tell you. Because if you don't, my promise to all of you is that you will experience this volatility. You will experience things that has ran the investor and trader out of the marketplace. They do not know how to keep up with high-frequency trading technologies. That's a different story. What I'm here to tell you is that there's this great opportunity. What do I mean by opportunity? Certain stocks that warrant great price levels. IBM is gapping down. We want the gap down list. Yes, in a lot of ways, we're greedy in our own ways. We all have that problem. It's a character defect. But what are we greedy for? Getting the quality on sale. And they'll be picking these markets one by one. Just like people that will be picking them off one at a time. And we'll be doing our homework one at a time. We will make a market in the exchange model as a market maker intraday, but the ones that we want to put in our savings account overnight, we'll be on them. And if one of them hits there today, even though that people will be selling, we got Visa down, you got LinkedIn down, you got that Apache down that we would love to buy at much lower prices and certain things. That's not making a market, but those are, buying those and letting the values run 5, 10, 20 days, whatever the case may be. I just want you to experience this gap open down. I want you to experience your failed government. I want you to experience that Apple was 521. And when Apple can get, if Apple, well, we would love to see this thing sell down to right around $475 now before they report earnings in January. Because we prefer to get all the volatility out for an overnight position during intraday. We'll make the market with it all day long. I'm just going to tell people one thing. 2013 is going to be a different year. And the thing about it is you're going to have several of these type of challenges in these markets. And these markets are going to open in 6 minutes from now. And you can clearly see the price line gap open down. Look at that, 630. I got a 616 by 618. And what does that mean? Price volatility goes to the downside. Price volatility goes to the upside. Price volatility works mathematically all the way around in price action. Let it be known that we were short the ISRGs, but look at the CMG. Doesn't gap down that much. We already told people the other day, right when it got below $300, the short had to be put on. And we have it on. And we have a gap down working for that short with our other members here. So you're making money on this gap down. This is one that looks like this right here. ISRG. This stock was manipulated. It's a medical device maker. It's still not on sale. We were short this name. This name had to go down. When this name was up there at 550, between 550 and 560 area, it was to be bought the $480 puts, which were $70 below the market, and none of you can deny it. And that's talent. And that's making money. And let me just tell you one thing. Using the options on it were dirt cheap. Why? Because it was $70 below the strike price. That's number one. Number two was the fundamental analysis and where we're at in the world. At some point, it'll get on sale. I'd like to see it sell all the way down to 350, 320. Not today, but over time. Here we go. CMG, we're going to be on this trade. We're already in it. And the people that are in it, you know how to deal with it. Here's that Netflix trade. It's had a lot of price volatility on it lately. We'll be watching the $85 calls. We'd like to see this thing sell down below $87.50 today. Within the volatility. Because then when we do get in, we're going to get that upside volatility in these movements, and then we'll cash in that side of the trade. We're going to be focusing on the $715 call, and I'm going to open up in 3 minutes. And it is going to be a wild one. And it will be an electronic tape that is computed by machines. Humans don't know how to act in here. They don't. And we do. And that's why we're doing it live in free market.